Are investors the new activists? And we spoke a little bit about what's happening in the United States, and I'm watching the unraveling of so many institutions that do some of the investment in emerging markets, for example, or even aid and so forth. And this topic is really fascinating because investors could be activists, are they? What does that mean to all of you? So I'd like to start off with you, George, if you could tell me how you feel about this.
How do I feel? I think investors can and should be more engaged. I think one of the biggest issues is, frankly, is market structure has changed over time. And in my career, we've seen passive grow from sort of 5 to 55% of the market, and passive firms' orientation change from really leaning in on governance and frankly taking the mantle on ESG to now pulling back dramatically.
So you're seeing a pullback on ESG investing?
Passive firms are absolutely, if you were to talk to one of the passive leaders 3 years ago, they would have been talking a lot about they would have used the word ESG many times and been talking about how they are going to work to change companies. And today, most recently, Vanguard, for example, entered into an agreement with the US government as relates to bank holdings, just banks and just non-Fed regulated banks, where they're not even going to speak with management. They don't, we're not going to try and influence folks. So I think my answer to your question would be investors should be actively engaged, and I must say I worry that we're headed to a place for capitalism that we don't have investors actively engaged as owners, and we're increasingly on that path, which I don't think is good for the system. The counterpoint would be in private markets, investors are, of course, quite engaged, and I think that's one of many reasons that we see continued growth in private markets at the expense of public markets.
Fascinating. Brian, King Street focuses a lot on restructuring companies, struggling companies, and so forth. Tell me about how you think about investing from that perspective when you try and save a company and consolidate, I guess, and what you think. You obviously look at impacts in ESG and so forth. How does that process work?
Well, we try to look at traditionally they say good business, bad balance sheet, and so what we try to do is right size the balance sheet in terms of the debt side that the company can survive and prosper. So some say it's analogous to venture capital in the sense of you're seeing around the corner and say, can this company make it? And one has to be mindful that there are issues that cause that company to get into, and a lot of times it's bad governance. And so it's funny, we were up for an ESG mandate and the company said, oh, you're distressed, you can't qualify for ESG. And I said, well, we put the G in ESG, so I found it puzzling. So the way we approach is what can be changed? Is it an imagined problem? Is it a what are they focusing on? Which markets do they have to get out of certain markets? And so there is in restructuring. I mean, there's some that actually take it to the private equity. We actually buy the companies. We neglect to do that because it oftentimes these things are bad for a reason and they're not recoverable. So one has to have a portfolio that you can focus on, asset heavy businesses that are recoverable assets and that have good prospects and are in the proper industries that you can work on the governance. Sometimes it's just a bad business and you don't want to even touch it. So one has to be mindful of that. But to George's point, in terms of the active versus passive, and he's right. The rise of private credit and of private markets, and it differs. Many times banks treat these as relationship, lending, and so they're less likely to perhaps push as much as they should, and then companies get into financial stress. But I do think that as long as it's constructive, and which in many cases it is good to have.
Ben, I want you to jump in here. Cordian Capital operates in emerging markets. And, when we look at emerging markets, we wonder what the governance is like. I mean, if you're looking at the African continent, for example, we've got to really think about what systems are in place and exist, and what targets you need to hit. So tell me about some of the things that you're experiencing right now.
Well, thank you, Eleni, and if you might permit me a small correction, we're middle market growth investors around the world, but mainly in developed markets in really only three sectors: digital infrastructure, energy, and the agriculture value chain. We do have some mandates, primarily in direct lending in emerging markets, but I think to the point about governance and activism, George surfaced the point initially, which is that the changing contours of public markets are such that a distressingly and worryingly small percentage of people there are setting prices based on fundamental research and on a view of value creation over several years. If you take a look at what happened to Boeing, you had safety issues emerge, you had employee culture issues emerge, you had an entire community of stakeholders, and oh yes, the shareholders suffered enormously. And so I think the move to private markets investing, whether on the credit side of the balance sheet or the equity side, is bringing a much more profound and important sense of activity, in the sense of activism, to these companies. And in our direct lending funds, if a company needs growth capital, they're renting our money, and if they want to grow for the longer term and are looking for a partner, then we're buying into them. But that's the approach we take. One must be actively involved, and in a sense, it's replicating the pricing function of the public markets of decades ago. And to those of us in finance, this might be moderately funny. To the rest of you, you'll think we're Martians. But it was interesting. I picked up a report from one of the large U.S. investment banks, and they were saying, oh, look, public markets are mispricing it, but the correct pricing is being set by private markets today.
That's really good. Okay, Rich, jump in here. BCG, does a lot, incredible work in terms of understanding markets, and frankly, we rely on a lot of your research, we rely on a lot of what you do. So what are you seeing right now, and what are you anticipating in terms of trends in investment, in ECG, and frankly, just keeping on the track, and frankly, the progress that the world has made in focusing on this type of investment?
Yeah, so it's quite interesting, actually. I think, one of the questions is, do company leaders and investors care about a multi-stakeholder landscape? I don't think there's any doubt among leading companies, CEOs think about stakeholders and not just pure financial returns. You can't exist as a CEO if you're not sensitive to how your employees are doing, the communities you operate, the different issues. But we've seen an enormous change over the last few years. I would say there was about a 7-year stretch between 2014 and 2021 where the trend was all listen to the strongest voices on every issue and try to appeal to them and say very bold things about what you intend to do and all the rest. And what we've seen over the last 3 years is a pushback on that. And now I would say corporate leaders and some investors, I'll come back to the investors, are thinking a lot more about multi-stakeholder environments, but they're trying to be, one, more aligned with value creation and what they're committing to. So really put value creation at a core, recognizing that environments that attract diverse top talent and that treat people fairly and are inclusive are more likely to have motivated employees who are going to stick around and contribute. Recognizing that investing in the energy transition and trying to be ahead of where markets are going and where technology is going is normally a good long-term play. So it's not that they've walked away from the stakeholder view, but I would say more aligned to purpose, more aligned to shareholder value, and more aligned to what they can authentically defend versus just making statements to have a feel-good moment on stage in one community.
So let me ask you this then. I mean, if I look at what's going on in the United States, I mean, with DEI, for example, unraveling of that, we're seeing the US pulling out of the Paris Agreement. We're seeing a lot of things happening. And one of the things is that people are wondering is whether the US stepping away from from these issues, does that mean that sort of the private sector says, well, we don't have to worry about these issues either, right? We don't have to worry about them. So but we've proven that it makes investment sense to worry about these issues and to think about these when we're investing.
I think companies, those are two, they get bundled together, but just to separate them.
Yeah.
I think as it relates to talent, I think companies are going to be much clearer that they are grounded in a meritocracy and building winning leadership,
yeah.
winning people and teams, and that's at the core of what they do. And creating environments that attract top talent of all backgrounds and create an environment where everybody can succeed and where people can feel like they'll be treated fairly serves the entire community. To be able to do that. And I think that will cause a change in language, and it will also mean some companies had some programs that fall outside the boundaries of that, and they will change those programs. But the heart of believing that inclusiveness and fairness will allow attracting broader range of talent, I think we'll see most companies finding pathways to try to do it. I think on the climate side, I think companies will be very focused on how do they continue to be on a path to recognize we're going through a massive, decades-long energy transition that will reshape markets, but ensure as they're making investments related to climate and sustainability, they can show that it's value creation accretive and not destroying. And I think heard this in Davos over and over. It wasn't that people aren't committed to tackling these issues, but they're very focused on ensuring that they can defend internally and externally that there's a business case around it that is value creating as they do it. And that's much sharper point of view than it was, say, 18, 24 months ago.
Absolutely. Ben, I hope I can get it right this time. You focus on digital infrastructure and renewable energy, agriculture value chains as well. Yeah?
Yeah.
So I want to talk about the renewable energy side of things, and to the point of Rich, with regards to fighting climate change and these types of investments. What kind of trends are you foreseeing?
Well, as a franchise, we've decided that where we will compete most effectively in the energy transition is to focus on new technologies and new areas of development. So we purchased a GP last year that has expertise in hydrogen, which is a real industrial market that's going through a hype cycle. We've focused on building a nuclear team. We've focused on markets where there is underdeployment of some of these technologies. And so the point, to build on your excellent comment, is that the private sector has been doing a very significant job steering capital towards these sectors. And what is often confused in the market is the European Union, British government, performative box-checking, heavy bureaucracy approach to this, and the actual tangible delivery of results. So what trends do we see? If you look at this region alone, with its commitment to renewable energy, to hydrogen, to nuclear, you're seeing massive investments that are going to tackle some part of the climate problem. And certainly on that front, I probably approach things with more optimism than the average newspaper headline.
Brilliant. George, I want you to jump in here as well. What's your take?
I agree with both of those comments. I think, frankly, the language we used was not helpful. So DEI, for example, I suspect if we picked 5 random people out of the audience, we'd have 5 different definitions of what the E means. Does the E mean equal opportunity? Does the E mean equal outcome? Does the E mean we meet people where they are and make sure they can succeed? And it became politicized and performative. But I very much agree that certainly we believe deeply that diversity and inclusion are part of building a winning team and are excited to continue to press forward. Does it mean we have to look at all of our practices and perhaps amend them as the laws change? Of course. But I think 99% of what we're doing will remain unchanged and remain committed to doing that. Likewise, I think ESG became sort of it's like a
box you needed to tick, right?
Very much so, and we lost the core point, which others have focused on, which is financial materiality was always supposed to be a core part of it. And so you see the outcry in the U.S., which I think is poorly understood globally. It's not anti many of these things. What it is when you saw people saying we are going to change these companies in these ways and employing, say, New York values on Texas citizens to clients who didn't want that and who were auto-enrolled into their products, that was problematic. But I think in terms of commitment on the climate front, certainly commitment to governance, believe that the best firms will remain focused and will do so through a lens of risk and opportunity, as opposed to through what had become a somewhat performative exercise.
All right, fantastic. Brian, we've got about 9 minutes left, so I want to kind of go global a little bit, and I want to see what everyone's thinking, where we are right now, and how you are perhaps changing your thinking or just preparing for whatever scenario might be out there. You know, you focus, as we said, on distressed companies, and you're able to come in and fix things up. So what are you anticipating in terms of the way the economy is going to go? And I think specifically in the United States and globally as well. I mean, gold is rising. That's always a sign that people are kind of reticent and a bit worried about the future. What are you anticipating? What are you pricing in? And how's that going to impact what you do?
Well, I think we think the U.S. is quite strong, will remain strong. I think you have disinflation being exported by China. You have, in the U.S. market, certainly Doge, given the fiscal largesse that we've enjoyed, is going to be ratcheting back, so a bit disinflationary as well. Coupled with the regulation being taken off, which is really good for a couple percentage points. So how quickly can the fiscal be replaced by the private sector stimulus is going to be a question. Europe continues to struggle. I don't think it's as dire as prior panelists would indicate. However, I do think parts of Asia, it's kind of a mixed bag. MENA, Middle East, it remains quite strong. I think they will be the beneficiary of a lot of the capital. And as you know, we've talked about in prior panels, what we're trying to do is create securitization. We're trying to create securities that are able to be invested by the Western world invested looking for money. And I think that there's a lot of shifts that are going on. Overall, I think the global GDP will remain muted but firm. And so I think we're constructive. But what's happening has been dispersion. And I think what people are looking at, why gold has gone up, is because there's still a lot of M2 money supply that is out there. It has been extinguished. There's not as much transparency. You're not getting money back on your VC or PE or PC, private credit. And so I think people are looking at this narrowness of a rally in the Mag 7 and saying, although the last couple months it's been balanced, but still in all, there's a lot of companies that aren't growing. And so there's that, where do you put your money at very tight credit spreads and very high equity valuations? I think that's causing this other things to do in gold, perhaps.
I mean, we're in an interesting space, right? Because we want private sector to spend, and we want to see money flowing into the various sectors because we want to see growth. But I also find it very fascinating that you are all here in Dubai at the World Government Summit. So I want to end off with, giving me a sense of why you think this region is perfect place for investment, opportunity, and what your projections are. So let's start off with you, George.
So we're eager to continue to invest in the region. I was just in Riyadh yesterday, opening our office there. We'll be building an investment team there. We've just made a series of investments into companies in the GCC. I think it's tremendously exciting. There are a number of world-class companies that are being built here. And we're eager to bring capital from the U.S., from Europe, from Japan, from places that we're active to try and support the growth that's happening. So we look at it as it's our primary growth initiative for this year, and anticipate that we'll have a both more material client present, helping clients here diversify globally, as well as a more material investment presence in the region.
Yeah. Ben, do you want to jump in? Ben, do you want to jump in?
Ben.
Yeah, Rich, go for it, Rich. Yeah.
Oh, sure. We've been here 20...
We're all very well behaved.
Yeah, I know. You guys are so wonderful.
we've been here 20 years, and it's just been remarkable to see the continued evolution in this part of the world. The combination of having an enormous sum of capital, unique in the world, and being able to recognize that for a variety of reasons, building a broader-based economy is in the interest of the citizens of this part of the world, and they're committed to doing it in a way, almost in the way we saw telephony evolve in developing countries, where they were able to skip the wired generation and go straight to mobile. I think as it comes to industrialization, building a 21st century economy, you have countries here that are really committed to leapfrogging over some of the classic pathways to industrialization and embracing new technology, embracing AI, embracing the next generation of energy technologies, and having the money to be able to back that up, to really take big bets and to attract great companies and great investors from around the world. So it's a really exciting time.
And learn from the mistakes of the countries that industrialized in the early 1900s. I think it's a great one. Ben?
Yeah, I'd say there are two things that really stand out. The first is for the themes that we invest into, which is the digital economy, the meeting the surging demand for energy with new technologies and food security. There's a lot of very interesting things going on here. We signed an MOU yesterday that will hopefully lead to some significant investment here in one of those areas. So we're quite excited about that. And things are getting done here in a way that in other economies is just not happening. Airports are built, energy is produced, things get done, and that sense of dynamism and forward movement is palpable, and it's a good place to invest into. And secondly, I think the return of great power competition, U.S.-China, will return this part of the world to its historic importance as an economic nexus, east-west, on many axes. And I think that return to a more historically important position will also manifest itself in investment opportunities.
Brilliant. Brian, I give you the last word.
Yeah, I think the big focus should be on how do we develop the markets, security markets. If you think about the U.S., 25% bank-dominated, Europe 70%, why the U.S. performs so much better and has a lot more resiliency. In the MENA region, it's 95 to 100%. And so this lack of availability of credit, particularly for emerging companies, is a real deficit that needs to be filled. And I think it also gives suitable investments for the wealthy, and there's a lot of obvious wealth in the region, not just at the sovereign level, but also on the individual level. And so instead of just being deposited in your bank or having to buy real estate, which puts things out of the value because you're getting a lot of value in real estate, which can be overvalued, versus being able to provide a suite of products, also needs more depth and breadth of the equity markets, because it can be concentrated in Saudi and Aramco and other concentration here in UAE. So I think that's the evolution of these markets. These have always been first world economies, but the markets have lagged behind. And that, given the rule of law and given the ability to adjudicate on creditor issues, these are all very important things that attract investors, that give them that safety and soundness, that encourage investment and give alternatives to. You got to go into the originate distribute model for the banks, and that gives that systemic soundness, which often is missing in economies that they become concentrated and too much between the sovereigns and with the banks.
Well, I'm very lucky because I've got a minute left, which means I can give you a very quick question. Yes or no answer, please. Are you feeling optimistic about the global economy, George?
Optimistic,
medium term, let's say
optimistic, but exhausted, by the news cycle. I don't know how you do.
Well, no, we're very exhausted. I promise you. The last 3 weeks have been. I'm waking up every day. I mean, then who would have thought plastic straw issues? I mean,
yes.
it's been fascinating.
It has been exhausting, but optimistic. Yes. Optimistic,
Brian.
Yes.
So.
Yes, with the usual caveats around historical volatility.
Too many words.
Well, no, it's true. It's a lot of. I think we should anticipate a lot more volatility depending on the news cycle, because every day we get shaken and woken up to. Always brace myself in the morning. Rich?
I have 4 words, not one.
Tell me.
High base, high beta. I think the base case economic outlook is very positive. I think we're doing things right now that's creating much more uncertainty, and the beta is higher around that as well.
Gentlemen, you've been such a pleasure to speak to. Thank you so much.